Let's connect. Ricardo Castro here with Castro Realty Group and Nebraska Realty every 2 weeks from Nebraska Realty building in Omaha. We're a team of realtors. We are 7 realtors serving Nebraska and Iowa for many years now. I have the pleasure to have the company today of a good friend of us, of someone who many of us in this industry, we look at him as a role model, although he's younger than I, for sure. But Greg Acero here to my right, it's going to talk to us about his path, his journey, his knowledge in this industry and in the lending industry specifically. Greg Acero, welcome.
Thank you, Ricardo. Appreciate you having me today.
Thank you. Greg, we met about maybe, I would say, 7-8 years, perhaps. You were with a different institution from Kansas City, with offices here at One Pacific Place at the time, I remember.
Oh, yeah.
And one thing that caught my attention, and one of the reasons I've been knocking your doors all these years, is that I saw the way you manage your lending business. It was so different than I was used to. 7 years ago, I was already in the business for 12 years, I think, and I thought I saw all the business models or all the way this kind of brotherhood between the lending professionals and the realtors worked, and what I saw was something different. I mean, you manage your team and convey the information as a business. I saw you as a business unit, with some other aspects and benefits that I'm going to go deeper later. Tell me first, before going into your mortgage and business experience, tell me about yourself and your family.
Yeah, no, absolutely. I appreciate that. Thank you for that kind introduction. Got in the mortgage business about 18 years ago, and honestly, it was not a part of the plan. Which is it ever, I guess. I came to Nebraska in 2001. College baseball led me here, and I, with playing college ball, met my wife in college, who's from a small town of Ashland, Nebraska, and through college we made a solid relationship that we ended up obviously getting married and having beautiful children and all that great stuff. But through all that journey, when I was in school, I was an accounting major. I thought I was going to do accounting. But I found out through my kind of senior year doing some internships that as much as I like numbers, I don't know if I really like accounting. It was a little maybe too boring for me. I like people, and I like to get out and kind of consult and sell, if you will, too. So through all that, I was trying to figure out what's the path for me. And I was reading a magazine one day, and it was a money magazine, and it said the jobs that'll be in demand for a long period of time. And I was like, well, that's something I should look at, because a job that's going to be sustainable for a long period of time is something I should really look at, because maybe that's a job for me. And out of all those jobs, one of them was a mortgage lender. And so I started looking into that. And I told myself, I was like, people are going to buy and sell houses, I think, for as long as I'm around, at least. It makes sense to me. So I was like, I'm going to check this out. So that's kind of how it all started.
In Omaha.
In Omaha. So I graduated. I took the summer off. I told myself, this is my last summer of my life where I'm really going to have no responsibilities. So I enjoyed a little bit of the summertime, and then I started applying for jobs. And that's when I started applying for mortgage jobs, once I understood the job a little bit better. And with a small brokerage here in town. And that's where it all began. And it was a unique experience, because back then, this was 2005, it was an industry where it's kind of sink or swim. And there wasn't a lot of training. There wasn't a lot of coaching.
It was so different at the time.
Yeah, it was honestly, they're like, here's a phone book. Here's people you should try to call. See if they're interested in a mortgage. I'm like, okay, well, let's see what we got. And so that's where it all started. And I think what helped me prevail through that at the beginning was I'm just being an athlete, as you are too. Like, you're just competitive, like, by nature. So I refuse to lose is my attitude. So I was like, I'm going to find a way to make this work. And so I started just slowly having small successes through it, and you just keep going. And through all that, learned a ton. And, the timing, though, was interesting, because that was when there was the big subprime market going on.
Yeah.
And anybody could get a mortgage loan. It was interesting
We
coming
went
into
through those years too, representing buyers. And not that pleased too, but
Oh my goodness! I remember some of the stuff people would say. Yeah, if they meet this requirements, which wasn't much, they get a mortgage loan. You're like, and I didn't know any better. I'm like, okay. But then shortly after that, a few years later, then the 07, 08, real estate crash, and that's where for a moment, I was like, how am I going to survive this? I'm still new to the business. Didn't have much of a network or a book of business, if you will. And so it was just like, all right, we got to grind, we got to hustle, we got to find a way to make this work. So that's kind of my, journey into it and kind of how I got here. And yeah, it's been a lot of fun. And I can honestly say 18 years later, I still really, really love what I do. It's a fun job. And every day is a little different.
And I have to say, Greg, not only you like what you do, you like to coach and you like to guide and educate not only your clients, also realtors or people in the industry, which is not common. It's not because other people don't have the goodwill to do it, just because other people maybe don't organize their business the way you do, so they don't even have time to coach, or they don't even have time to share information. The transparency or the way Greg does business, right a few seconds ago you mentioned a couple keywords for me that now actually they relate some ideas, or I can understand you better in some ways, things that you taught me in the past or you share with me. One of them, for example, this guy is an accountant by career. I didn't know that. So now I understand why you always tell us you need to have your profit and loss. Otherwise, what kind of business you're doing? Which is truth. I mean, many of us, many business owners run their businesses. We have our small successes, as you said, going forward over the years. But we're still not living a life where we can enjoy life. We basically we're slaves of our business. Mm-hmm. What people see out there are that we are serving them pretty well. Mm-hmm. Even when we make mistakes, they just see the mistakes. They don't see where the mistakes come from. And sometimes it's just because we are not well organized. We are not running a business the way it should be. Mm-hmm. And Greg is always stressing that aspect to us. One time I remember bringing clients to Greg, and basically Greg saw, like always, W-2s, bank statements, this and that. He said, I can offer this, but actually you should go with what I see to this other loan officer, to this other person. And basically the reason is, like many people might know or maybe might not digest, is yes, I mean, there's what someone can offer to other subject at one specific time is maybe someone else could do based on the programs or products, something different to that client. But I like that. I like people who are honest and not in order to make a decision, a commission basically. Just try to stick myself, my clients into some kind of program that you guys have. Yeah. So I always gonna remember that, Greg. Greg, and like many other people, you got into this just who knows how, basically. And that was my main experience too. You went through the good years of real estate, before 2008, you just mentioned, then the crisis. Mm-hmm. Now, the last few years of low, crazy interest rates, and now it's transitioning to another aspect. Yeah. What, in those 4 stages, although we are in the beginning stage of one other, what was the part that you enjoyed the better, or perhaps that you think maybe the question is that you could help people better?
Yeah, to answer the first part there, to enjoy it, I enjoy all of it. Every day is a challenge, and I find myself to be different in one regard is I will always promote myself as a problem solver. And I feel like I'm the best problem solver that you can find in lending. I will always find a solution, and even if that solution isn't me, exactly, I'll provide the solution and get you to where you need to be to take care of you. And that's how everybody should do business, in my opinion.
That's ethics.
Absolutely. And everybody should have the utmost ethics to take care of people. And if you do that, I've had people that I didn't help directly, but they still referred me other people because they saw the transparency, the honesty, and the just strong ethics. But in this market right now, we coming out of record low interest rates. And what a time that was for people to capture a great, mortgage on real estate. And now here we are, going into the end of the year here, 2023, and as of today, we're at high 7 interest rates. And who would have thought, right? Exactly. But we're dealing with some, pretty, strong inflation, and dealing with a lot of different factors from the economy to rates, all these things that I personally don't think that we're at the end of it all here. And we got some rates that are going to increase a little bit more before we see a downside. I've been telling everybody right now that I think at the latter half of 2023, excuse me, I said earlier 23, but 22, but going into 23, we're going to see, I think in the third, fourth quarter, by that time, I think, rates will start to go back down, which will provide an opportunity that everybody that's buying a house right now is going to be able to capture then a lower rate because they'll refinance, right?
Exactly.
And that's part of what I'm stressing right now. I know rates are higher, yes, but people don't buy property based on interest rates, in my opinion. People buy real estate based on a payment.
Exactly.
Right? So if I can afford the payment, I will buy it.
That's what it matters.
That's what matters. And so are payments higher because rates are higher? Absolutely, but it's still a payment, so can I afford this payment? And if it is, you'll buy it or invest in it, whatever it is. And so what I also say is the market's changed so quickly where we come out of this, we're still in this very low inventory. But when rates are low, we had this big buyer demand, really low inventory. So it was to me an extreme like seller's market.
Amazing.
People were willing to fight over a house. 30, 40, 50 offers I saw just in Omaha, and I'm sure around the country is maybe even worse. And people were escalating the prices to get a house. And all of a sudden now, rates are up, buyer demand is down, inventory is still the same, but the opportunity as a buyer is very promising to me right now because over the last few years, you haven't, as a buyer, had the opportunity to negotiate a deal. There's price reductions, like 50% around the country in price reductions of houses. There's seller concessions that are happening. It presents an opportunity to finally be able to, as a buyer, negotiate a deal.
That the word negotiation hasn't been in the equation for many years. Negotiation or seller's concessions.
Yep.
It's being I'm seeing it now.
Yeah. I just went back and looked in the last 30 days. In the last 30 days, we got about a little over, it was like 22 contracts. And that of the 22 contracts we got, 48% of them had seller concessions.
Oh.
Yeah.
Wow, that's a pretty good percentage.
And if I look back 4 months ago, it was like 1 or 2%. Prior to that, it was absolutely zero.
Nothing.
It was actually the reverse. It was the buyer concessions to the seller.
That was amazing, right?
Yeah.
For the people who are not in this industry or who own houses for many years, for the first couple months in my 19 years experience doing this, I saw the buyer paying the closing costs of the seller.
Yes.
That first time ever. At least in Nebraska, in Omaha,
Likewise. Never seen it before. If somebody would have told me that was going to happen, I'd have been like, no way, that's not possible, is it? But it was happening. I mean, people buying houses over asking price. They're fighting over the house. No appraisals, no home inspections. I saw some interesting things. And so that's why I take it back to my point. This is a great time to buy because we're seeing home inspections again, which is a sign of something, which is good for home inspectors. I know they've had to be stressed out. I did an event at a country club here recently, and I had a panel of inspectors come in.
I was there.
You were there?
Yep.
And when they got there, I mean, they were so excited to be in front of some real estate agents because talking with them on the side, they were like, Greg, our business is pretty slow right now. So just trying to help them get out there and be noticed and stuff like that. But it's a great opportunity to buy because regardless of the rate, you can negotiate a deal. And right now, you can buy the house you want because people 6 months ago, 12 months ago, how many people didn't get the house they wanted necessarily? They just got a house.
Exactly.
Right?
They were just satisfying a need more than anything else.
Yeah. And so to be able to buy a house that you want and negotiate, I think that's a big win. And you can always refinance. And if you look over the last 40 years, interest rates have always gone down. We're just in that time frame where rates are up, but the opportunity to refinance will happen. And you still have the house and you're buying it now and you can get a good deal on it. You just got to hold on to the mortgage and get a little better rate.
And like someone said, interest rates, if you are renting, you're paying 100% interest rate.
Yeah.
Because the property is not yours. You know, the rental fee is not going to any of your future. But at the same time, what needs to be taken into consideration, as you mentioned before, when we're buying a house, the decision should be made if we're satisfying a need also, but if I can take care of that need, if I can pay that monthly payment, you know. So it's a cycle. Like everything else in life is a cycle. It's gonna go up like it's going, and it's gonna come down again, and prices keep going. At least I don't see any signs of price reductions at this point yet. I'm talking about Omaha. And one thing that I want to stress, and taking advantage of these opportunities, please listen or watch or read local information regarding our industry. Yes, you need to not live in a bubble, of course, but at the same time, Omaha, Nebraska is, in my experience, I see it pretty particular and different, unique in many ways.
Yeah. Well, 2008, I think, to just kind of, tee up what you're saying there is 2008 was a great way to show out the strength of Omaha, because we had the smallest decline in property value across the country, where some markets saw a 70-80% decline in value. And I think ours was like around 10%.
At the most.
Yeah. So that shows great strength, and another reason to own real estate here.
Yeah.
Yeah.
And that's the time, being a newer agent at the time, I was in my fifth year, when I started to learn about clients, investors flipping or landlords, because there was a wave of people who came from bigger states buying for business purposes. Talking about that, Greg is a mortgage professional with Fairway, but at the same time, you also own real estate as an investment.
Yes.
Can you quickly or briefly talk about that, or explain a little bit about your experience as a real estate investor?
Yeah, absolutely. So, being in residential lending, you're always around it. So, at one point or another, the thought always crosses my mind or other people's mind of, man, like I see all these transactions and deals going on and investors buy. I'm like, why am I not one of them? And I think at first it was just, you don't know what you don't know. And so fear holds you back. And finally, I was like, I'm just going to buy a investor property and try it out. And that was at the end of 2009. And what a great time to buy investor properties, by the way, because the amount of HUD homes and foreclosures and opportunities, like it or not, they were here in Omaha, plus everywhere else. So you could get a good property at a good price. So it was a win. So I bought my first property in 2009 and kind of then got my feet wet. And I tell you what, it was different than what I expected, and it was because it was a little easier than I thought. And after that, I was like, well, okay, I can do that again. And that's where it started. And so been investing since then in single family, multifamily, and commercial. And today we have a little bit over a $30 million portfolio.
Excellent. Excellent. Congratulations.
Thanks.
Do you have with Fairway, you have any programs for investors?
Yes. So, I actually get a lot of investors referred to me because of my experience there. And just understanding their need set and understanding the conversation and being able to educate them if they're beginning or if they're scaling, wherever they're at. So I get a lot of investors refer to us. And yes, a lot of times it's honestly just a standard conventional loan, but we have some other unique products that we can offer, like what's called a debt service coverage ratio loan. It's essentially a loan that is available that you don't have to have any income to qualify. As maybe crazy as that sounds, that is true. They qualify that loan based on essentially, and just to summarize it, if you had a big enough down payment, about 20% roughly, and if the debt service ratio lines up, meaning what could you rent it for, what's the mortgage, if you got about a 1.2 ratio there.
1.2.
Yep. Then based on that, and you have the down payment and some other small parameters, credit score, stuff like that, that would qualify, but income is not included in that scenario. It's really, does the property qualify itself? And so what we do is we get an appraiser out there. They'll do an appraisal report as well as a rent schedule and show what it could rent for.
And that program, you have it up to 4 units, or yes?
Yeah, it's anything up to 4 units as long as it's residential.
Up to 4 units.
Yep.
Okay. And are you seeing a trend of more investors starting to invest at this point, or how are you seeing that aspect?
I feel like investors slowed down a little bit of lately. I would say going back probably 6-12 months ago, and then further back than that, investing in Omaha there was a lot of activity. A lot of activity. I think it slowed down a little bit lately just because as an investor buying, cash flow is important. And with rates getting higher on a new commercial note or residential note, the question becomes, can I make a cash flow?
Exactly.
Right. And so I think they slow down because they can't make the numbers necessarily work, be it if it's a single family or if they're really focused on, a multifamily deal even, and being able to justify cap rates and everything like that in that particular investment.
I've seen in our side, in our team, I've seen some decrease on the investors' activity, mainly on the commercial or multifamily. Mm-hmm. On smaller multifamily, still flippers. I think people. I mean, at least in our team, we still see the same activity. People buying to fix and resell.
Yeah, I've heard more of flipping because I think there's less noise of the buy and hold. Yeah. There's still a lot of activity on the flipping because they need the money short term.
Exactly.
Yeah.
As I want to highlight what he said, interest rate is not always that important, but of course, based on your reality, your current situation. Maybe if you're a landlord, you're buying a multifamily building, of course, I guess the interest rate is going to play a different role than if I'm buying a regular single-family residence, right?
Absolutely. I think the interest rate plays more of a role in an investment than it does a primary because, one, I believe rates do fluctuate up and down. And honestly, if you look at the historical average, a good interest rate is like 6.5 or less.
Exactly.
But people get used to seeing certain stages of real estate and where money's at, and I understand that. But I think at the end of the day, real estate's always a great investment, be it if it's a primary or if it's a second home or if it's investment property itself. And at the end of the day, we all need somewhere to stay. So why not own at least your own primary residence rather than rent?
Exactly.
Because like you said earlier, the interest rate on renting is 100%.
And also as an investment, man, I myself started with my own, my first investment property in 2005. It was a flip, actually. My first rentals were in 2006. And I have to say in my low years where I needed some help to pay my bills, my rental properties were the ones which helped me.
Absolutely.
It's amazing, man. What would you say is an assumption that is not true, or any assumptions that are not true about mortgage lending?
Yeah, a couple come to mind right away. I think the first one is people think they got to have excellent credit to buy. It's not true. For example, we do conventional loans, which we can have as low as a 600 credit score on a conventional loan. When I tell it to people, they have no idea. They're like, oh, 600, okay. On VA loans and FHA loans, we can go down to 560. So you don't have to have excellent credit to buy a house. Now, does a lower credit score have an impact on the terms? Yeah, a little bit, of course, because it's based on risk. But at the end of the day, everybody thinks they got to have some superior credit score of 760, 800, and it's just not true. And the second one I see most common is they got to have a lot down for a down payment, 20% or whatever it is. And that's the farthest thing from the truth. And there's two things with that I would mention. One, that's not true. You can buy a house. We have a lot of programs with almost zero down. VA, zero down. USDA is zero down. We have a Nebraska Investment Finance Authority. The NIFA loan here is a home buyer assistance loan. They'll give you money to buy a house, right? And you can get in for as little as $1,000. So there's a lot of options. But it is, in my opinion, it is smarter to always put less down anyways. I think we need to understand and utilize leverage and putting your money to work for you.
Exactly.
If I put a much money down, that money isn't necessarily working for me, right? If I have $100,000 and I can go buy a $100,000 house, I have one house. But I can also, with the $100,000, go buy 5 houses, right? And I can build cash flow. And I can own more now. I have more assets. There's more value. They all appreciate.
Exactly.
I can do so much more with that. So I think that's what we need to be looking at. I think those are the two most common myths that I see. Some other ones really are people don't know. Really just about mortgage loans in general. So because there's the lack of knowledge, they're too scared to get out there and just ask questions, or they feel like people maybe even, look at them differently because they're trying to get a house and they don't think they qualify. They just disqualify themselves.
Exactly. Some people just when they in our case sometimes we even get walk-ins in our office sometimes. Yeah, I want to learn how to buy it for the future, but actually my credit is bad. I said, how do you know your credit score is bad? Well, because a few years ago I ran it when I was buying a car. Or because who knows, I divorced. I got a divorce a few years ago, things like that. And we should tell them, in this industry, thanks God, and in Nebraska, because that wasn't the case. I know realtors in California and in Virginia. In this specific state, what I see is usually the realtor is here doing what we are supposed to do. The loan officers are the professionals on the financing side. There's a title company, inspector, things like that. So we usually tell them, go and ask.
Yeah.
Make an appointment, ask for help, and just explain and be transparent.
Yeah.
Put on another example that we said, feel like you're going to an attorney and you have to tell them the truth so they can defend you better.
Yeah.
Something like that.
Yeah, no. I will tell you, one thing to add to that is, I think you have to ask a lot of questions. And I tell people all the time, there's no such thing as a dumb question. Please ask, right? And I'll help you. Because once we understand what you're looking to do, we can figure it out, right? So tell me what your goals and objectives are, and let me help you.
Better for everybody.
And even if we can't help you today, at least we could put a plan in place. Without a plan, where are we going?
Yeah. Plan is a key word. We're about, it's been a nice, beautiful conversation. I think we're going to have you here back again. In order to start wrapping up this, what are your plans with Fairway serving our community in the next following months, getting into, we're just about to get into 2023?
Yeah, Fairway is an amazing company. There's so many great things about them. Number one, I think to be successful at something, like in lending or in real estate, it's all about the platform you have. Right, so who are you joining and partnering with? And I think Fairway offers a fantastic platform for myself, my team, and everybody else at Fairway to succeed. Fairway is one of the top 5 mortgage lenders in the whole country, right? So sometimes people might ask, hey, is a big company good or is a small company? I will tell you, regardless of the company, I think it's about the people more than anything. And I think people come to me not because of whatever name's on the building. They come to me because they trust me. But Fairway allows me the opportunity to be able to service and offer service and products to almost everybody. And it's been a great win for my team and I being there because the culture is just amazing. It's a very transparent company, very flat for how big it is, which is just amazing because it's hard to find that in the mortgage space. It really is. But we have some big plans. We want to be number 1 market share in Omaha, Nebraska. And I know that's not going to be easy, but we're all hungry, driven, and willing to put in the work. So we want to be number 1 market share and continue to help Fairway make their growth and hit their goal, which they want to be number 1 in the country. So we want to be a part of that. That's just a lot of fun. And we want to continue to help the community in any way, shape, or form. We just want to be known as someone that is highly trusted and does the right thing every time, really focuses on the service, right? I think lending is kind of a commodity, unfortunately, like it or not. But there's always that relational space, and that's where we want to be, right? I don't want to be a commodity lender. I want to be a relational person. And people come to me because they know me, like me, trust me, and they know that they're going to get taken care of, get the right advice. And people just keep coming back, for that. That's a big thing. So we got some big plans at Fairway, and we hope to just continue to work towards that. I tell you what, this has been a great opportunity in the market to be able to recruit some great people because the market, when they go through these moments like this, the market kind of gets purged, right? Because the business is down and things like that, and people look around them and like, what's going on? What am I going to do? And so a lot of people right now are fearful in the market. And everybody I talk to, I'm like, guys, this is one of the best opportunities we're ever going to see in our marketplace, on real estate, on lending, everything. And so I'm taking advantage of that and meeting with the right fit people to come join us in our, moment of where we want to shine and just keep growing. So it's going to be a lot of fun.
So Greg Acero team and Fairway are hiring in Omaha.
We are always hiring. We're always looking for great talented people that want to be a part of what our vision is and be a part of our culture.
Thank you for being here today and for being in our industry every single day for us.
Yeah.
Because it's just a phone call sometimes and he helps us. Where can they find you, just to finalize this? Where can they find you on a website, phone number?
Yeah, absolutely. I'm all over, I guess, the internet, if you will. Been really working on, getting ourselves and marketing ourselves, promoting ourselves. But you can reach us online. My website's easy. It's just gregacero.com. You can go there and contact us, get any information you're looking for, and again, reach out to us by phone or email as well. You can find any information on the website. Our office is over on 114th and Dodge, just on the north side there, in the Miracle Hill Business Plaza. People are always welcome to stop by as well. And again, if you can't find us, I would find that hard to believe because we are everywhere right now. So
thanks for your time. Thanks for being here. And thank you. We'll be with you in 2 weeks. Castro Realty Group, Nebraska Realty.